Are you looking to take out a home loan in 2023 or refinance an existing one? You're probably scanning the home loan comparison sites here in Australia and trying to work out which is the right loan for you. Well, today I'm going to share with you some tips and tricks on how to work out what is the right loan for you. And be sure to hang around at the end of this video because I'm going to share an example comparing three separate home loans and an example of which one is the right one for you and how to choose it. So hang around for that. Hi, I'm Michael Sgarbossa, and welcome to my channel, Save and Invest and Grow Your Money, a channel that I created for busy people like myself for tips and tricks and easy to implement strategies to help grow your wealth for you and your family. So, what am I here to talk about today? Well, I'm here to talk about something called the comparison rate, which will help you be able to determine what's the right home loan for you. So, let's get started. So the comparison rate. All right. Hang on a moment. I think I've got myself on the wrong page here. I'm going to have to start that again. Apologies for that. All right. Okay, so comparison rate. Here in Australia, a bit of a hiccup there. Here in Australia, we're fortunate to have the comparison rate to help us determine what loan that provides us the best value for money. Okay, so and if you're in the UK, because I like to share a bit about the UK, I lived there for 10 years, there's something called the APRC, and that's the annual percentage rate of change. Now, everything I share about the comparison rate here in Australia and in comparing loans is also pretty much directly comparable to the APRC in the UK. So it's pretty similar. So if you're in the UK, just listen to what they say about the comparison rate here in Australia. It's going to be pretty similar for you as well. So what is the comparison rate? The comparison rate is a tool to help you work out the true cost of the loan over the full length of the loan. So the full length of the loan is its full term. So like for 25 years, for example. Now it's calculated by using a standard formula converting to an adjusted interest rate. And this is called the comparison rate. And that calculation includes various things such as the amount of the loan, the term of the loan, your repayment frequency, the interest rate or the various interest rates over the term of that loan, because they can change, and all the standard fees and charges that are connected with that loan as well. So, for example, a bank's advertised interest rate may be 5.49%, but the comparison rate might be 6.75%. So you can see that that comparison rate rolls in all of those extra fees into one number, one rate that you can compare across different loan options that may be available to you for whatever your purpose is. So just with that comparison rate, it is a rate that by law here in Australia, all lenders must display next to their advertised interest rates. And it's the same in the UK for the APRC. Lenders over there must display it as well. So very, very similar. Okay. Now, comparison rates have to be provided for fixed term credit only for personal use. So fixed term means a loan repaid in a specific time frame. So like a home loan over 25 years or a car loan over 10 years, for instance. So if you're wondering about credit cards and if you compare credit cards this way, no, you can't. Credit cards, store cards, etc., all those sorts of cards, they're instruments of continuing credit, meaning they don't have a fixed term to pay off, and they're not required to have this comparison rate, and you can't really use it anyway. So if you're thinking about credit cards, just forget about that one for the moment. It's not appropriate for those types of credit instruments. So there are some limitations to using the comparison rate to compare loans. And these are just a few things that I just wanted to make sure that you're aware of when you get onto the comparison site and you start looking at the comparison rate. Oh, great. And you just line them up. You got to remember what that comparison rate is made up of and what it isn't. So you get a true picture and a true understanding, and don't go off down a path thinking that exactly what you're seeing is exactly what you think. So some of those limitations, things such as like it doesn't consider things like changes to the variable interest rate component of your loan in the future, because we don't know what the changes will be in the future. Okay, so it's at a point in time, it is now, and it will compare variable interest rates as part of your loan package as what that variable interest rate is today. Um, there's other fees or once-off fees that won't be included. Fees like stamp duty for your property, mortgage registration fees. That's not included in these comparisons. Other fees and charges which may or may not be charged. For example, early repayment fees or with redraw fees. So these are fees that are based on some event, not a continuing fee as part of your loan. It's an event that may be triggered by yourself or something else. Government charges are not included, but they're all probably pretty consistent anyway, so it's probably not really a big deal. And other features such as fee-free banking, offset accounts, flexible payment arrangements. So there's a whole multitude of features you can get with your home loan. Um, and you've really got to be careful about which features you decide to choose because a lot of these features come with an added cost. So now those added costs aren't considered as part of the comparison rate. So you have to be aware of that as well. So when you're getting a loan and you've got certain features that you're looking for, such as I mentioned, make sure that whoever you're talking to provides you or informs you if there is a cost associated with each of those features. Quite often there's not, but sometimes there is. So it's another tricky thing that you have to look out for. Um, so, as such, the comparison rate does not provide a complete picture of the cost of the loan, but in essence, it's actually pretty close. So, it's a good thing to use. Without it, it makes it inherently more difficult to actually try and compare different loan products because they're put together in different ways. So, now also, you have to ensure that when using the comparison rate, that it's based on your specific circumstances and calculated in the same way for each loan that you're comparing. So, um, this is where you're probably at this point you're probably going to the loan comparison sites here in Australia, such as CanStar, Rate City, Finder. In the UK, just trying to remember what it is. I think Money, Money. Anyway, doesn't matter. In the UK, Google it, you'll find them. So you've just got to be careful when you go to these sites. So here in Australia, if you go to those sites, for example, the comparison rate, if you have a look at the fine print in the sites, the comparison rate for home loans is usually based on a loan of $150,000 over a term of 25 years. Now, $150,000 for most of it represents a pretty low loan for the homes that we live in. So a low to value for the homes that we live in. So what I mean by loan to value is the value of the loan, say 150,000, might be pretty low to the value of your house, which might be six or 700,000. So that's what I mean. So it's a high likelihood if you're getting a home loan or you're refinancing your existing home loan that that balance that of 150,000 is probably not appropriate for you. It's probably going to be much higher than that. And typically, when your loan to value gets higher towards the value of your home, so when that increases, well, the interest rate usually increases as well because for the banks, the bigger the loan is against your home, the more risk it is for them. So they add a bit of interest to cover their risk. That's simple business. That's what they do. Now, when I say 150 grand's a bit low, it's pretty much true because, in fact, the average loan size for owner occupiers here in Australia is so much higher than that. So it's ranging from about $460,000 in Tasmania up to about $750,000 in New South Wales. That's average loan size. So you've just got to be careful on what that comparison rate is built on. Okay, so I think it's a little marketing ploy on these sites. They use to hook you in with all the lenders. But so you just got to be aware of that. I would highly recommend speaking with a mortgage broker to help you through this minefield of looking at loans. They will help you get a real picture on what loan is right for you and the likely interest rate you could achieve with your specific circumstances considered. And they'll make sure that the different loans that they offer to you will have that comparison rate calculated the same way to your specific circumstances. Now, that's really important in regards to deciding what is the loan for you. So, highly recommend engaging with a mortgage broker. They are professionals in this space, and that's what you should do. So, you're probably thinking it's all a bit too hard. Well, that's why I'm saying recommending a mortgage broker. Okay. Now, the other thing to think about as well, and this is where mortgage brokers can really come in handy to help you understand how to compare loans, is in a few years' time, it might be 3 or 4, 5 or 6, might be 10. You may be looking to remortgage your loan to get yourself a better deal or refinancing that loan. Now, if you're doing that, then that sort of then impacts the way you use the loan comparison rate, because the comparison rate is over the full length of the term. So if you're looking to remortgage, in a few years, then you really need to consider that, because if you're going onto a loan that's got a discount period for 3 years or 12 months or something like that, that's something you have to think about. Mortgage brokers will help you through that. Now, like I said earlier in the video today, I've actually got some real practical examples here of different types of loans and how to compare them. So I'll just get on with that and help you through it. So the example here is we are based on a home loan of $300,000 and the loan term is 25 years. So I've got 3 lenders here. Okay, we've got lenders 1, 2, and 3. Lender 1 has a variable rate of 6.31% per annum. And the fees for that is part of the comparison rate is $675 application fee and ongoing $10 per month account keeping fees. Now, lender 2 has got an introduction rate of 4.99% per annum for 12 months. Then after that 12 months, it reverts to a variable rate of 6.7% per annum. This one has no application fee and an ongoing $12 per month account keeping fee. Lender 3 has an introductory rate of 4.25% for 6 months and reverts to a variable rate of 6.5% per annum. So, a bit cheaper on the introduction, a bit cheaper on the overall variable rate, probably a bit more expensive than lender 1. So you're starting to probably get some ideas here on which one of these you would choose. And with that one as well, $500 application fee and a lower $8 per month account keeping fee. So look at that. Which one do you choose? Which one of these 3 has the lowest comparison rate? So it's not an easy thing to really navigate. You're looking at all these items and you're probably thinking, is it lender 1, is it lender 2, is it lender 3? Probably doing a bit of a back of the envelope calculation in your head and choosing one of these. So this is where mortgage brokers can really help you out. So what's the result? Which one is the best loan that you could choose? It's got the lowest comparison rate. Let's have a look then. Surprisingly, all 3 of these loans work out to be exactly the same over the life of the loan. So at 6.5% per annum. So maybe that surprised you. If it did, then that's interesting. So it really highlights the need for obtaining professional advice. And once again, I highly recommend using a mortgage broker, a broker that's impartial to the lenders that you may be directly talking to, that can provide you with a balanced view from a broad panel of lenders in their portfolio for you and your specific circumstances. So that's what the comparison rate's all about. It's a really great tool to be able to choose the right home loan for you. But like I said, again, I highly recommend engaging a mortgage broker. If you want to use my broker, you can always reach out to me in the chat and I'll get in touch with you personally and make that recommendation. So hopefully you've once again, as always, gained value out of this video today. If you did gain value out of it, please subscribe to my channels. If you think of other people who are going to gain value out of this, feel free to share the video and go and have a look in the description of this video, because I've left a couple of other videos for you there in and around home loans and what to do with the lenders. So you'll find those really interesting as well. And that's it from me. Thank you very, very much for spending your time with me today. I enjoy it, as always, enjoy sharing this knowledge with you, and have a great week, and I'll catch you next week. See you later. Bye for now.